Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. I just about have my voice back. It's been what, 2 weeks? Last week, what a struggle. And those of you that know me, at least peripherally, imagine me not being able to talk and what that does to my life. Typically I'll be teaching, 2 or 3 classes a day and to not be able to speak and to lose my voice and to rasp through things, horrific. Keep smacking my ring into my table. You'd think one time I would learn. Anyhow, but feeling much better, a lot more energy, happy to be with you, and at a very interesting time. So why don't we get to it? Let me just check something. Yep, we are in good shape. Making sure I was recording. Today is April the 7th. Quick reminder that everything that we do here is for informational and educational purposes only, not intended as investment advice. All right, so what's moving the markets? It was a curious day, to say the least. So this morning, the Dow futures were down about 1,200 points. The NASDAQ at one point after the market open was down 4.5%. And there were legitimately people who thought the market was on the verge of a collapse. No exaggeration. And I'm not sure that, first of all, there was this rumor circulated that Trump was going to postpone the tariffs by 90 days. And then the markets started to recover. Well, he said, or one of his representatives said, not true. That's fake news, which you thought would have caused the markets to go back over a cliff, but they kind of held their own. And in fact, just take a quick look. I know the NASDAQ closed up a bit on the day, not a whole lot, 0.1%, and the S&P was only down about 0.25%. I mean, that was a swing of nearly 5%. That's huge. So does that mean it's time to jump in? Not necessarily, but man, could you imagine if we would have had back to back to back 5% losses? That would have been potentially catastrophic. So we avoided that for now. Tariff rhetoric is very difficult to parse. So here's latest and greatest. I guess Israel agreed to zero tariffs on US imports. And then, they almost sounded apologetic, like they never should have done it. Okay. The EU has agreed to zero tariffs, but Trump is looking for other concessions where he feels like things are not in balance. But that would be huge, not to go to battle with them. Apparently, a representative of Japan is coming in. Want to have a talk with our representatives about cutting some kind of a deal. See, here's the thing. If progress starts getting made on the tariff front, then the market will go back more than likely to about where it was. We'll make up for those losses. I'll tell you, the fly in the ointment, as far as I'm concerned, is China. You can roll over a lot of countries. I don't know that you can roll over China. They're a superpower. And I think that they would love to cause problems. for us if they think we are causing a problem for them. They have stated they're fully prepared for a full-on trade war. Telling you, trade wars will significantly hurt the economy, which would significantly hurt the market. So, I sort of see this happening in two parts. Getting some of the lesser players to make certain concessions so that Trump can declare victory, whether actual or perceived, and then ultimately working something out with China. If that happens, we're in great shape. All the fear goes away, etc. If it doesn't happen, think of all the products we import from China or that we outsource to China. I mean, think of a company like Apple, which has lost 19% of its market cap in 3 trading days because a lot of their manufacturing happens in China. So that's the one ultimately that we need to fix. I think there's a lot at stake there, and we'll just have to watch. And until these things get resolved, there's going to be this gloom over the market. 10-year Treasury is at 4.191. It was below 4, which meant investors were running to safety and then felt like, for whatever reason, okay, let's make a shift from treasuries into equities, which raise the interest rates a little bit, very acceptable number for equity investors, and the stock market rebounded. And oil prices are currently sitting at 61.09. They were below 60. Those of you who have been in my classes, and it may not be too late, keep an eye on oil prices. My experience is anytime they dip below 60, pretty good time to either buy the ETF USO, which basically owns oil, or do some call options on it. Some in the money calls. And even though they're in the money, I might go out, 60, 90 days on those. That is typically a very high probability trade. Oil rarely stays below 60 for any extended period of time. So what to watch this week? What's the big news? Consumer credit was off a little bit. As reported today, I don't think that is significant. We have small business optimism index coming out tomorrow. I don't think that is significant, not compared to the other things we're dealing with. We have the minutes of the Fed's March meeting. I doubt that there's going to be anything in there that's going to move the needle. On Thursday, we have initial jobless claims, always meaningful, forecasted at 223,000. Then we get some inflation number, CPI, monthly. Prices only expected to go up 0.1% month over month. We're expecting year over year for the number to fall to 2.6%, and then core inflation to be at 3%. The Fed doesn't pay a lot of attention to CPI. You and I do. They pay attention to what's called PCE, personal consumption expenditures, but CPI is still meaningful. And then on Friday, we get wholesale at the, inflation at the wholesale level, which is the PPI and the core PPI. So any of those things going to be giant market movers, not in comparison to tariff news. Tariff news is what's driving this whole ship right now. Last week's heat map, man, Finding green is like playing Finding Waldo. Some major hits last week across the board. And then the year-to-date numbers, it's interesting. Now some of the leaders are Netflix, Walmart, Philip Morris. There's a covered call candidate. It's up 67%. Talk about your flight to safety. The utilities, Berkshire B shares. I'm doing covered calls on it. Biggest winner for the last 12 months, Palantir, up 240 some percent. Been having a recent pullback like everything else. Market sentiment is way down. Percentage of independent investors who think the market's going to be up for the next 6 months down to 21.8% versus 62% think it'll be lower. I'm telling you, it's going to be higher. How much is the Fed going to cut rates? Well, now the Fed is probably getting lined up to help bail things out. There's now a 32% probability that there'll be a cut in May. I don't think it's going to happen. Not in May. I say June. So by June, there is a 95.9% probability of a cut. So we're looking for a cut in June, July, and September, and then December. So we have 1, 2, 3, 4 cuts that are currently forecast. Remember when there were 0 cuts forecast? Everybody thought inflation was too hot. Fed wouldn't be able to cut. Sector returns year to date. Every single sector has dropped, some a lot worse than others. So the S&P is down about 14% year to date. Technology is down 22, discretionary 21, communications basically matching the S&P, industrials double digits, financials, which were doing great, not so great anymore, materials down 8, energy down 8, REITs down 7, and then small losses for utilities, healthcare, and consumer staples. No place to hide right now. Let's take a look at the charts. And really what I want to look at is the intraday chart, which I'll get to. Let's pull up the S&P 500. I mean, it's just flat ugly, right? So if you look at today's candle, it had moved higher and then came back, but it was a lot worse. So it finished kind of in the middle between its high and its low on the day. We are well below the 50-day moving average. Let me see how far back we need to go to find a support level. Yeah, we're just about. Yeah, we're kind of at that level sport right in here. So where did we bottom out? 49.67. We're now at 50.62. So if we can hold that, stay above 5,000, and we got a shot. What if we fall below that? Let's take a look at a 3-year chart. Then there's a long way to fall. 4,500, which is more than another, well, roughly 10% from where we are now. So that would make a total of 20%. We're already in bear market territory, or certainly on the NASDAQ. Let's take a look at the intraday. So this is what I was talking about. Here's where we opened down and sunk, got down to 48.41, and then we climbed, got back up to 52 and change, And then we dropped. Here's a double, actually a triple bottom. And then we just kind of went sideways for the balance of the day. No direction. And that's kind of the theme right now. No direction, not at this point. So, we'll just have to wait and see. This is all going to be news driven. It's what the market's been doing now for a while. And these tariffs, they're just driving everybody crazy. Hopefully there's some payoff for it, but too early to tell. Okay. Well, I made it all the way through. Voice is doing pretty good. A little bit of scratchy, but I'm a bit relieved. Anyway, hope you have a great rest of the week. And I'm hoping next week I might have something positive and more definitive for you. We'll see. I'll do my part. Till then, be safe, be blessed. Bye for now.